We have a lot to discuss today because Bitcoin is rebounding. It's sitting around $86,000 after dropping to $81,000 late last week. However, there is a major threat for the market that I do want to discuss today because it could have ramifications well into the end of the year and potentially Q1 next year. And you guessed it, it is surrounding what is currently happening with MicroStrategy. I also want to talk through my current game plan when it comes to altcoins, the bullish and the bearish variables that are impacting the market, and how I'm personally playing my portfolio right now, because there are a couple of positions which I have decided to add, which I want to run you through in today's video. But I am very cognizant of some of the headwinds at the moment. So I think today is going to serve as a great guide to help you navigate the next few weeks in the market. So without further ado, let's get straight into the video. I don't want to waste too much time speaking about Bitcoin price action because I do believe the fundamentals are far more important right now in terms of where the market goes next. However, I think it's important to acknowledge that we did find support around the 81,000 zone. On the lower time frames, I'm looking for a reaction in this micro range, either a retest of the 81K level. Oftentimes we leave untapped liquidity down in these zones when you have a violent wick to the downside, or I'm looking for a reclaim of the $88,000 level, and then we could start potentially pushing up back into the mid 90s, which was a major zone of interest towards the back end of 2024. But to be completely honest with you, the Bitcoin price action has been ugly. If we do look at the lower time frames here, you can see it's just in a downtrend and it's not painting a pretty picture. However, there are some similarities between the current price action and prior bull market dips that we have seen back in 2021 and back this cycle. So you can see this dip from the peak to the trough was 35%. The prior dip that we saw back in January was 32%. The prior dip that we saw mid last year was 35%, so the same length as the current one. And if you want to go back and look at the price action from 2021, the dip that took us down mid-year in June was even bigger. It was 50%. So it is possible in a macro uptrend for Bitcoin to have a major sell-off and then go on to make a new high. But obviously there are some major variables in the market, which we're going to discuss today, which are going to impact Bitcoin's ability to potentially have a recovery here, because the liquidity signals are definitely positive, but then there are also negative signals counterbalancing that. So all of these things come into my thinking in terms of how I position. So we're going to get into this, the bearish variables and the bullish variables, and I'm going to paint a full picture for you here, and then we're going to get into exactly what I'm doing. But before we break this down, I want to announce something we honestly don't do very often on the channel, and I've been really hesitant to do this in the past, but for a limited amount of time, because it's Black Friday and because a lot of you were asking for a discount, we are doing our biggest sale ever actually, 50% off access to the Mars High Club for only the first 200 users only. If you've been following the channel for a long time, you'll know we don't normally do this, but I've decided to do it to celebrate Black Friday, and it's probably going to be the lowest price that we ever offer in the group. You can now get it for $99. It typically sits at $199 per month, and this is the place where all of my calls are dropped first, all of my research is dropped first. Paradise, Doc, Surf, and Morin post all of their trade setups and analysis there. We have live mentorships every week. We have Fabian, who's an amazing macro analyst and low cap analyst there as well. We have exclusive indicators like the Money Noodle. We have research reports on long-term investments. We have over 100 plus hours of masterclasses. We have built, in my opinion, what is the strongest crypto community in the space. And if you're looking for somewhere over this next period to maximize what has become a more difficult market, in my opinion, this is the place to be. And there are a few really cool things that we're also adding to the group that I'm going to announce later in the week, which make the offer even better. But I know the 200 spots are already going to go really quick, so I don't even need to tell you about those things just yet. But if you have been sitting on the sidelines and you've been hesitant to test Mars High Club, or even if you were in there, let's say last year, and you maybe want to give it another go because we keep improving, we keep adding analysts, we keep adding features, then this is the best possible chance you'll ever get at this price point to try out the Mars High Club. So I'll leave a link in the description below. You've got to use the code Black Friday, 200 people only, or 3 days, whatever lapses first. I imagine the 200 is probably the thing that's going to lapse first, so good luck. Now I want to break down the bearish variables in the market and the bullish variables in the market, because I think this is necessary to paint a picture of where we currently sit. So let's firstly focus on some of the bearish variables. These are the things that are putting pressure on the current crypto price. Firstly, we have had a breakdown of key market structure. We lost the 50-day MA. We lost the money noodle. That's one of our indicators in the Mars High Club that we've built. And you can see that we were sticking to it the entire cycle on the run up. It was also a very important indicator in 2021, and we have now broken down. You can see there's technical support at 75K. We are front running to make a higher low, technically speaking. I do think we could be set for a bit of relief here, but the trigger that you'll want to look at a short-term swing for that would be a reclaim of 88K. But I think it's very clear that we have had a breakdown of key market structure. I watched Rand's video earlier today, and I think he summed it up quite well. Right now, we're basically in a situation where you're either a liquidity cyclist, so you have the thesis that we're in an expansive phase of the liquidity cycle, thus you should see higher prices, and we're going to touch on that later in the video, or you are on the other end of the spectrum and you're a technical analyst and you're realizing we're making lower highs and lower lows and breaking down, and you're starting to get defensive. The other thing that's happened off the back of this technical breakdown is a lot of people that believed in the 4-year cycle now have had their thesis, well, I guess validated. We hit a peak and now we are seemingly ending the 4-year cycle. Now, if you've watched my videos over the past couple of weeks, you'll know that I'm not a subscriber to the 4-year cycle. In fact, I don't even believe that 2021's peak was off the back of the 4-year cycle itself, because you can actually line up the NASDAQ peak with the Bitcoin peak, which to me suggests it was a peak for risk in general, and not just the Bitcoin halving triggering a peak. Also, the recent peak that we had also corresponds, even though stocks technically peaked a couple of weeks later, it roughly corresponds with the local high for equities as well. So usually Bitcoin follows macro, and that's where, spoiler alert, I am on the side of the liquidity cyclists versus the traders, because I do believe that there is a bigger picture here, but there are certain variables for Bitcoin, which we'll discuss now, which are limiting its growth versus equities and are making the risk reward slightly worse on that trade, which is one of the reasons why we've obviously dumped so aggressively. That's whale distribution. So we've seen lots of OG whales selling. B, this is a new risk. We're seeing miners selling. Now, not all of the miners are being forced to sell because price is low, but a lot of them are actually pivoting into AI because they can have superior returns from their idle GPUs there. So a lot of them are pivoting to data centers. So this could cause a slight reduction in the hash rate and some of the miners liquidating some of their Bitcoin. C, you have the DAT unwind as well. So you had that treasury trade, which pumped crypto, now starting to unwind. We're going to talk about MicroStrategy very soon because that is one of the reasons with the MSCI downgrade threat, which threatens MicroStrategy's positioning and other DAT's positioning in the market. And then you have a variety of other things as well. Institutional demand is exhausted for now. We're seeing that in the price action. So we saw the ETF inflows, which were really positive. We haven't really seen the inflows starting to tick positive again after ticking extremely negative on the downturn, which suggests that value buyers haven't really stepped in. So what we thought we may see is that, okay, even though institutions or, the DAT trade might eventually unwind and we might go from like 120 to 100, if we dip below 100, we should theoretically see value buyers, so retail stepping into the market, but that's not really what we've seen yet. So in my opinion, that leads me to believe that we need a broader catalyst, a broader liquidity catalyst to get retail attention back into the market. So it's showing me that Bitcoin is being traded a lot on momentum and not just its standing as a macro asset. Of course, we've also seen some major equities from the Magnificent Seven like Meta and Tesla sell off. Meta because of their massive capex, and Tesla has an incredibly high PE ratio, so there's been murmurs of it being overvalued, so we've seen a sell-off on that side as well, but Bitcoin has sold off more aggressively than all of those tech stocks. All of these reasons are contributing to the current price action, and not just the current price action, but to be honest, they do represent headwinds in the market, and when I get into my market strategy later in the video, these are taken into account. I can't just act blindly. I can't just long stuff blindly and trade blindly when we do have serious concerns. On the other side, I want to go through some of the bullish variables to reinstate my longer term bull thesis that I've been discussing over the past week or so. And that is the fact that, one, we do have massive upcoming liquidity catalysts still. So we have QT ending in December. You have to understand, and I talked about this with Fabian in what I thought was a great conversation on the macro side on Friday, that we've been in a restrictive liquidity environment due to the US government shutdown, due to the fact we had quantitative tightening. Now we are starting to exit that environment. So quantitative tightening is ending. We should see the balance sheet, you can see it was dropping, starting to flatten out again before hopefully that leads to eventual expansion of the balance sheet. We also have stimulus like the $2,000 incentive. And we know that Bitcoin is very correlated with not only the money supply, but liquidity injections in general. So that is the first reason to be bullish. And it's a big reason that can offset all of this stuff in terms of the overall macro picture, but not right away, because these liquidity provisions aren't going to kick in until December, Q1. So it might take some time to price into the market. And until then, we're fighting the headwinds of the selling. Just being realistic in terms of timelines here. Two, and this is a technical indicator because we talked about how we've had a breakdown of key market structure, but on the technical side, we have seen a death cross. So that's when the 50-week simple moving average crosses with the 200 moving average. And typically, although it's called the death cross, it actually does mark local bottoms. It happened in 2023, it happened in 2024, and it could be happening again this year, so keep that in mind. There's a couple of regulatory things as well that are in crypto's favor, like the Genius Act, which should open up the door for stablecoin adoption. I think one of the big bullish variables in the market as well isn't necessarily a bullish variable in itself. It's the absence of the bearish variable that we've had no traditional top signals firing across the market. We haven't seen pretty much any of the pie indicators, the ratios, the rainbow chart, whatever index you want to use. We haven't hit those traditional top signals because there was no euphoria. Now, of course, it's possible for Bitcoin to top in an environment where we haven't had a traditional euphoric blow off top, but that would be uncommon just based on what we've seen historically from Bitcoin. And, if the 4-year cycles want to stick to their 4-year cycle narrative, they also have to accept that the top really wasn't the same makings fundamentally in terms of a euphoric blow off top that we've seen in previous cycles. The other thing that surprised me is the altcoin relative strength. So we're going to get into altcoins and what I'm doing there later in the video. And we've actually seen decent relative strength from altcoins versus Bitcoin. So that is a bullish variable in and of itself. I'm trying not to read into it too much. I don't think it means max long altcoins. You have to be, nuanced with your actions in this environment, but it is a good signal nonetheless. And I think number 6 and number 7 are very important points. They may be last on the list, but certainly not least. Macro is still firmly in an expansion, so the business cycle is still intact. We're still seeing equities make new highs. We're seeing earnings strong. Credit spreads are tight, unemployment's low. Of course, this stuff can flip, but that is the current environment. And, you want to go with the trend in the markets. The trend is your friend until the end of the trend. And the business cycle, macro trend for risk assets is still up. And the AI bubble, although that is a term that, tends to scare people, it's still a bubble until it pops. Just remember that. And number 7, finally, the debasement trade is still intact. So you have gold still performing well. Fiat structurally weak. I think the dollar is starting to make a lower high. It should come down at some point. We know that Trump probably wants that. We're seeing sovereign debt exploding. Bitcoin remains a high beta asset to that trade. And we've also spoken about the AI energy arms race, which I do think benefits Bitcoin as well as a liquidity sponge. So this is, once again, the battle of the technical analysts and, the short-term traders who are definitely better off being in the bearish camp right now, and the bullish liquidity cyclists who are looking a bit longer term. So I think, and we'll get into the exact specifics around this later in the video, the best way to play the market right now is setting up for a long-term approach whilst doing things in the short term to mitigate against potential blow-up risk in your portfolio. For example, don't take on a bunch of risk in the short term, focus on long-term positioning, isolate short-term versus long-term portfolio positioning, and ultimately take advantage of some of this stuff while there are headwinds, because this can easily flip as we see the long-term trend playing out, and I'll talk about what I've done on Bitcoin. But what I wanted to do before I get into that is discuss this MicroStrategy situation, because I'm hearing a lot of noise about it. I'm also hearing some things that are wrong, and I also think it's one of the most important dates on the crypto calendar for the next few months. So let's discuss it. MicroStrategy clearly performing badly. It's starting to drop below support, although technical support on equities I don't think is as prevalent, but what we know is that it has been in a strong downtrend, selling off over 65% versus Bitcoin's 35%. So on a relative basis, although it ran up more aggressively, it's also selling off a lot more aggressively. But this sell-off has not just been driven by, typical market sell-off. I think there's potentially something a lot more sinister behind the scenes, which has triggered this sell-off and also potentially threatens its standing in the market and thus threatens Bitcoin. Because MicroStrategy at the end of the day owns over 3% of the Bitcoin supply. So Ryan did a great post summing this up. He says, "We finally know why the market crashed on the 10th of October and why it just can't bounce." 3. On exactly the 10th of October, MSCI, the world's second biggest index company, published the below. They are questioning whether companies that hold crypto assets as their core business should be considered as a company or a fund. If they are funds, they are not included in passive indexing. Why? Because this creates a circular loop. The fund buys assets, gets bigger, and then is included in more indices and then buys more assets. The expected ruling will be announced on the 15th of January 2026. And if this does pass, companies like MicroStrategy will be automatically removed from all indices. If this happens, it would mean that all the pension funds, normal funds, and all other passive index holders would dump MicroStrategy automatically. So that would obviously put a lot of pressure on the price, and then there's potential risk that now flows onto Bitcoin. So you can see why this is a big deal. It would mean that going forward, they would never be included, and as such, one of the big reasons why they actually exist would disappear. Since DATs have been powering the cycle and have been the most buying pressure of the cycle, the smart money saw this immediately after the 10th of October announcement and positioned accordingly. You can see the 10th of October this was announced, but flew under the radar until there was an article, and then I saw Ryan and a few other creators starting to highlight that this potentially was one of the reasons behind the sell-off. By the way, I still think the liquidation event was probably largely triggered by the API and liquidation engine issues on Binance and other exchanges, but this could have been one of the reasons for some of the whales and bigger holders of Bitcoin starting to take profits on their positions when the market still looked relatively good from a price action point of view. Rand says the market will probably continue to drum around until the end of December, and if the announcement is negative, we will get a huge dump in preparation for the removal of the indices. On the other hand, if it's positive, the bull market is back. So these are your timelines, December to January. There are a few timelines as well to watch around that period. Of course, you also have the rate cut decision in early December. I think this will also be a bit of a gauge for the market as well. And you also have the Trump tariff announcement that should be coming very soon. We think the Supreme Courts are going to overturn the tariffs, and this would be a good thing for markets. So there is potential for a few bullish catalysts to line up here, but if one or two go against you, then it has the potential to extend the sell-off. So in this environment, you have to be extremely nimble, and that goes back to what I was saying before, ideally positioning long-term and taking advantage of dips, because we know where the macro trend is going. We know that macro is still firmly in expansion. We know the debasement trade is still intact. We know that there are upcoming liquidity catalysts. So if there are some bearish headlines that do come out over this period, I would probably be a buyer. We saw Michael Saylor come out and respond to this. He said strategy is not a fund, not a trust, not a holding company. We're a publicly traded operating company with a $500 million software business and a unique treasury strategy that uses Bitcoin as productive capital. At the end, he says, index classification doesn't define us. Our strategy is long-term. Our conviction in Bitcoin is unwavering. I just want to comment on what could happen if they are removed from the indices, and hopefully this doesn't happen, but I just want to talk about that scenario. If we did see a bigger sell-off in MicroStrategy, I don't think some of this, FUD that you're seeing around, the NAV dropping to 0.1, 0.2 and triggering some massive Bitcoin margin call is correct. I mean, MicroStrategy actually can't be margin called, and they can be pretty flexible in terms of how they raise money, how they restructure credit, how they, manage their facilities. So they have lots of options. So there's not like one liquidation on Bitcoin. However, it could put them under pressure, and it could remove some of the buying pressure that was in the market. Obviously, if they're below MNAV, then they're not actually able to acquire significant amounts of Bitcoin, and it puts them under pressure, potentially having to liquidate stock, which also, kind of has a negative flywheel to the downside. But it's not a death spiral of sorts, because their debt is still on average 4.5 years away. They can restructure debt, and it would take really Bitcoin trading between like $20,000 to $40,000 for like a number of years to like really crush MicroStrategy. I don't think a dip to the downside, for a short amount of time will really affect them. We saw this in 2022 when MicroStrategy was also performing extremely poorly, and there was also a lot of fear when their NAV dropped to like 0.75 that they would go under and have to sell a bunch of Bitcoin, but it ended up not being true, and they ended up coming out of it stronger than ever. So history suggests MicroStrategy can rebound, but it does put a slight, headwind or a damper on the cycle until we are past that date. And as Ram points out, that date is on the 15th of January. So that's something to keep an eye on, and then maybe headlines before that get approved. I'm pretty sure Trump will, and his family, because they are very pro-crypto, will be advocating against this. There's lots of speculation that potentially, the Democrats were behind this and this was politically driven. If that is the case, I think there will be pushback. So this is just something to keep your eye on, because it's one of the major things driving the market at the moment. And by the way, if you want to screenshot, I'll try and remove myself here. If you want to screenshot this to have all the bearish variables and the bullish variables, go ahead right now, because I think these are good things to keep in mind. And the MicroStrategy one is on the left there. All right. Now for the rest of this video, I want to go through what I'm doing personally, and then I want to talk about altcoins for a little bit. Is it time to buy alts? Because I'm starting to get some questions, because some alts are coming into good value zones, like Solana, for example. Is this a chart that you should actually look at buying? So what I've been doing is I've started with accumulating some Bitcoin. I believe I started around the $92,000 to $94,000 mark and DCA'd all the way down to $81,000 to $82,000. Average cost basis is now around the current zone. I might actually be slightly up, but nonetheless, it's pretty much around the current zone. I'm going to continue to add Bitcoin. I've also added some MicroStrategy at the support zone. It's now broken below. I am not going to cut this. I'm not trading this. I was just using that as a reference point. If it does drop significantly lower, I would potentially look at accumulating some more MicroStrategy. What you have to remember in the market is that these recoveries typically don't happen overnight, especially when there are headwinds like this. Typically, bottoms take time to form, so there's no need to rush into positions. If I'm going to take a position, I want to start down the risk curve, so on something a bit safer like Bitcoin, and then as the market starts to establish a confirmed reversal, then I can move up into riskier altcoins. And then obviously when the market's doing really well and it's in an uptrend, then I have lots of opportunities on the altcoin side to capitalize on. So at the moment, I've added some Bitcoin. I have added some MicroStrategy. I've added some Zcash. So I've added a couple of large caps, and I'm also considering adding a couple more positions. I'm going to get into those positions in a minute here. But while we focus on the low down the risk curve side of things, alongside Bitcoin, MicroStrategy, I'm also looking at some equities. So obviously nothing in this video is financial advice. You've got to make your own investment decisions. This is for educational purposes only. But Fabian, one of the analysts in the Discord, who's amazing because he's actually very strong on the macro side. I think you guys would have realized that if you heard him speak on Friday. He's also been posting some equity trades as well, because Fabian and I, we also buy and trade equities. Historically, people actually weren't that interested. Like, I would post some of my equity trades and people wouldn't care. But obviously now there's more of a focus on it and people seem to care more about it. So we've been sharing this stuff and people seem to be really liking it in the Discord. But Fabian said he started scaling into Meta. I've also started to dabble in the Magnificent Seven as well. I've actually been heavier on the China side of things. That's something maybe we can discuss in a future video. I also did a post on that. Fabian also did a post on that. He posted some of his analysis on PE ratios across the Mag 7 as well. So yeah, if you do end up joining the Discord, and remember it's the Black Friday sale at the moment, then you're also getting access to this stuff. It's not just crypto. It's whatever we're doing as traders and as investors, managing multi-million-dollar books as well, because we're not just operating in a vacuum. We are using altcoins. We're using Bitcoin as a way to get ahead of the game quicker and compound wealth in other areas as well. And these are things we touch on in the Discord as well. But added some equity exposure, mostly indexes, a couple of specific stocks alongside Bitcoin, moving down the risk curve to MicroStrategy. My MicroStrategy position is much more than my Bitcoin position. Just want to make that clear. I just thought it's worth the bet. It could get worse. I'm definitely prepared for that, considering there is a bit of a negative flywheel here, potentially, especially if Jan 15th goes against us. But that is just something I will need to manage. Potentially, I look at buying more in that scenario and bank sailors' flexibility and agility to get out of that situation and restructure their credit. Now, that's on the lower end of the risk curve. As I said, as the market starts to establish it's getting out of this, and as potentially we get a rate cut and the sailor thing is behind us and we start to see some positive inflows again, clearly price will be up at this point, but it won't be truly euphoric. It might just be starting to form higher lows and higher highs. At that point, you can start really aggressively moving more into mid caps and small caps. But for now, I'm mostly focusing on these two categories of altcoins. Altcoins where A, I have really strong long-term conviction, or B, altcoins with super clear swing invalidations. So a couple of the examples in the B category are assets like Solana. I also have conviction in Solana, so I guess it's A and B, and actually AERO as well. So if it ticks A and B, even better. But these are good trades because you have the swing set up. So you have the lows here at 120, and then you have the swing high, which is 113% away at $250, and then you have your inval below the prior low, or even if you start to close like on the daily below like 110, you could look to invalidate. But this is coming into an interesting zone. Just keep in mind, you do have coins. I'm just keeping it 100 with you, and this is an example of something that I invalidated, like SUI, where I had my entry at $2 and it actually held. It responded quite well, but then it started to break down and I cut when it started to break below. So you've got to keep in mind things can break below. So Solana hasn't yet. But just keep in mind, it doesn't mean it has to bounce. It could have a temporary bounce and go lower. So the reaction to a level is often in trading, as they say, more important than the level itself. But I still think it's worth potentially looking at these value zones on these major alts. So Sol, I just have some limit orders down here. I got one fill. I haven't got a full fill. If we end up getting the fill, I'll take the position. I'm being pretty patient in this market. I'm not forcing stuff. Looking at AERO is at a major support now. It could break below, but even if it does deviate below, I'm still going to DCA position around this zone. It's not a hard inval level for me. This is more of a fundamental play because they've had a bit of scrutiny recently after an attack, I think it was, like a DNS attack, and someone, I think, hijacked their URL. They're rerouting things now. It seems like the protocol's safe. I don't think it wasn't a smart contract exploit, so no one should have lost money through smart contracts here. I think some people got fished, but I think this should be a recoverable situation for AERO, and if that's the case, I want to have some exposure to that because it's not often you get quality asset like this with FUD, and that's fighting the narrative a little bit. So that's a chance for me to position in AERO. I really missed like a proper entry when it pumped up to 130, so this gives me a chance. They also had the merge with Velodrome. They also have their mainnet coming in Q2 next year. So as a longer term swing, I think this could be a decent asset to accumulate and does tick these boxes for me. But to be honest, apart from this and Zcash, I haven't really added anything else recently. Zcash, I think, ticks those boxes as well. If you look at the 12-hour, you can see that it's been basically following the noodle. It's coming down to retest the bottom of this. I'm not so concerned if it breaks, by the way, because it is just forming a broader range at 420, and I do have inval below 420 on Zcash. There are many other alts that I like in principle. Like I think the Mantle Flywheel with Bybit will come back. I think BNB will come back. I like Link as well. I just haven't gotten that many technical triggers on these assets, and I'm trying to be slow. I'm trying not to accumulate too much. I'm trying to, be more aggressive with my Bitcoin accumulation and go a bit slower with altcoins, as I said, as we get more confirmation, moving back up the risk curve. Something like Link, I just want to see a reaction to this channel. Happy to pay the price on confirmation and buy in a little bit higher. So sticking to the majors and ultimately sticking to things in category A where I have long-term conviction, because if I'm wrong in the short term and I don't get the right execution or invalidation, at least I'm bullish long-term. So I'm going to be fine to hold that over an extended period of time. The things you want to avoid in this market are the super risky plays that you don't have long-term conviction in, because if the market goes against you, considering the trend is against us right now, you can get wrecked very quickly with those plays. And if you are going to take those plays, at least silo them. So have a barbell like this where you have long-term investments representing 80% of your portfolio, and then you have active investments, riskier stuff, and swing trades allocating 20% of your portfolio. This way, you silo the riskier plays and make sure that the majority of your portfolio, which is stables, Bitcoin, and majors, is protected. Because I'm trading stuff all the time. If you're in the Discord, I nibble on a lot of this stuff. You can see in my questions channel, I post lots of charts. All of my calls, by the way, are in here first. If I buy anything, I'm not going to go into the risky plays channel because once you join the group, you can see that for yourself. But that's where I post the risky plays. All that stuff is in the 20% part of my portfolio because there's still asymmetry in the market right now. There's still opportunities. Like if you go into Fabian's Altcoin Alpha channel, you can see that he hit that crazy trade on grass when it went from 29 to, I think, 65 cents overnight. And that was just based on news. So there's still opportunities to make money in the market. We're going to be getting into some ICOs very, very soon as well in the Mars High Club, which I think could do multiples very quickly. So there's still opportunities in the market. That's why I'm still paying attention. That's why I'm still here every day. I wouldn't be doing this every single day if I didn't think there was still opportunity in the market, but there is. But just make sure you silo it into a smaller bucket of your portfolio, something between 10 to 30%. For me, it's around the sweet spot, 20%. Then focus your energy on long-term investments with the rest. Then you continue to upskill, continue to gain an edge, And then this, in the right market, can actually overtake long-term investments, which is a great position to be in, by the way, because then you can just rebalance down the risk curve. So if you make a bunch of money up here, you can rebalance down back into Bitcoin and back into stablecoins and protect wealth that way. So it's good to play both games because there's skill acquisition on that side as well. So I think that's it for today. If you want to take part in this Black Friday sale, once again, the biggest sale we've ever done. It's the lowest price we'll ever have. And I wasn't going to do it, but I made a last minute decision to do it. You can use the link in the description below. Make sure to use the code Black Friday to get this. First 200 people only. I will see you in the next video. Have a lovely rest of your day. Peace out.